And Charlie, look, it's really been all about this tech destruction in the first quarter, how poorly these hedge funds that surround themselves with tech have done, but they did sell out of some of it in the first quarter.
Yeah, no, they really did. And just filing after filing, you see these stay-at-home pandemic-era names just pop up again and again, right? So you get Netflix, which of course has fallen 70% or so this year. Tiger Global backing out of that, liquidating its stake entirely. You see DoorDash down about 50%. You see Tiger pulling out of there. You see Melvin Capital pulling out as well. So it's a significant draw out of these tech names. But it also wasn't just tech. And I think one of the really interesting moves that we saw was Warren Buffett's Berkshire Hathaway getting out entirely from its Wells Fargo position. And that was a 3-decade-long bet by Buffett. He was a long supporter of Wells Fargo. And so that's a significant exit as well that doesn't have anything to do with tech.
Absolutely. And then you've got big position by Viking and MasterCard. So there's some interesting financial switches. The question, I suppose, is this. Are you surprised that maybe more hedge funds didn't collapse? Has the landscape changed? What do you learn from these kind of filings?
Yeah, it's been a really difficult quarter, particularly for hedge funds that focus on equities, right? So if you think about Tiger Global, that is Chase Coleman's fund that we've been talking about for a long time now, down 34% in the quarter, I think 44% end of April. The question is, that's such a big turnaround from 2020 when we saw it up about 50%. And a lot of clients have been asking, why was this down so much? Why was it not possible for a lot of these equity strategists to see this coming? When you look across the hedge fund industry, you haven't seen these down moves across every strategy, right? So if you look at macro, you see Bridgewater, that's up about 16% this year so far. If you look at multi-strategies, you see D.E. Shaw up about 6% in the quarter. So there are really big questions about this equity strategy.